Hey, what's going on, guys? And welcome back to my channel. This is Blood Phantom 81, aka Alex, and today I'm going to be walking through my main M1 Finance portfolio. This is the portfolio that I talk about when I say that I have an M1 Finance account. This is the one that I've talked about and made countless videos on, but this is the first time that I'm making an in-depth walkthrough ever since my first one, which was maybe, I want to say like 6 months ago or something like that. So it's a big difference between now and 6 months ago. Now it sits at around 7.6K. And I think around the time of that video was around maybe like 3K or something like that. But slowly but surely, I just kept on depositing every single day, just like I said I would. I reinvest all my dividends. In terms of dividends, I've definitely gotten a lot by now. So around $180 in dividends. And that's why my account is actually positive, is because of the dividends. So today I want to walk through some of my holdings. But first, I just want to talk about how much I emphasize daily deposits. So currently I deposit around $10 to $20 every single day. But in times of extreme volatility, such as the ones that we saw around Christmas or Christmas Eve, I went ahead and I started to invest a lot more money. So here on December 24th, I put around $209. If we go to the S&P 500, on December 24th, we made a significant bottom. And that day itself was actually pretty bloody. So December 24th sits right here. So pretty good timing, I would say. But that's also something else I want to talk about. So on my Robinhood account, I do try to time the market as much as possible. And that's just the kind of trader that I am. A lot of people say you can't time the market, and I haven't been correct over the past few weeks. But in the past, I have been able to time the market pretty successfully. However, I'm not going to be right 100% of the time. And we already know that. If you guys have seen my videos over the past week, you know that I've been expecting a market pullback and we haven't gotten that. So clearly I'm missing something. And I'm not always going to be correct when I try to time the market. So for those periods, I have an account like M1 Finance because I want to hold this thing forever. And there are going to be a lot of situations in which I'm wrong. So at the very least, I want this account to be as good as the market, if not better. So like I said, I do daily deposits, but in times of extreme volatility, even around this period right here. So clearly on December 24th, that was my highest deposit. But even on other days, I still deposited a lot of money. So $70 here on the 21st, $100 here on the 18th, $127 here on the 17th, so on and so forth. So that's something that I want to emphasize, is that even though you're doing a daily deposit, it's okay to be a little bit aggressive, and it's okay to want the best bang for your buck. And I really do think it paid off. So yeah, so now that I talked about the daily deposits, I want to go through some of these holdings, and I don't want this video to get too long, so let's just jump right into it. First off, it's this high dividend pie. I will link this in the description below. My largest holding here is SPHD. I've also made an in-depth video about SPHD, going through every single holding and a little bit more in-depth analysis, so feel free to check that one out. I will also link it in the description below. So SPHD is a massive high dividend, low volatility ETF. It has around, I want to say, yeah, $2.7 billion under management. Dividend yield is actually only 4%, and I say only because the rest of these are around 6 to 7%, and some of them are even at around 10% or more. So SPHD is probably the lowest dividend, but I felt more comfortable putting my money into something like SPHD because it's in a long-term uptrend. And I consider this somewhat like a high-yield savings account. So once again, in moments of extreme volatility, I'm going to do my best to put more money there. So I love this fund so much that I even bought it in my personal Robinhood portfolio, which I'm doing pretty well on right now. So average cost at $38.60, currently up 10% on SPHD, and that pays a 4% dividend yield. So every year I'm getting 4% of 1.2K. So I really like it as somewhat of a high yield savings account, as I mentioned. And it adds some stability and some balance to this portfolio because it's also low volatility. So that's definitely something I liked. And then the other stock that actually pays the second lowest that I want to talk about is Iron Mountain. So Iron Mountain pays around a 6% dividend yield, around 6.8. But once again, the reason why I liked it so much is because over the long period, it is in a steady uptrend. And there's nothing more discouraging than investing in a high dividend stock or ETF that is actually in a downtrend, such as Ford. So Ford has been in a downtrend since September of 2013. AT&T has also been in a downtrend ever since August 2016. Even though we're finding support here at this green trendline support that I've highlighted, it's possible that we bounce from here. But either way, the point still stands. When you have something that pays like 6% like Ford, yes, you're getting a really good dividend yield, but at what cost, honestly? And yeah, I mean, there's a whole debate on dividends versus capital appreciation, but I would prefer if I get both. So that's why I like Iron Mountain so much. But the rest of these are all really aggressive players, and they all pay monthly. So I probably won't go over them in this video, but stick around for another one. Cool. So my aggressive fund I won't talk about as well, but I do want to talk about my defensive portfolio. So my defensive portfolio, for the most part, consists of aristocrats and stocks that increase their dividends every single year. And these generally are a little bit more recession-proof than the other ones, and definitely more established. So once again, that's why it's called a defensive portfolio, and I've had this since May 29th. This is actually the portfolio that I feel the most comfortable about putting money in on a regular basis. So what I mean by that is, if my stocks are doing really well, chances are the aggressive portfolio is going to be leading the way in terms of performance. I may not always want to increase my average cost on those aggressive stocks, but in my opinion, these defensive stocks will never go out of style. And that's especially true because there's some defensive stocks that I'm actually down a significant amount on. For example, Kraft Heinz, I'm down 13% on. Constellation Brands, I'm down 22% on. Kellogg, I'm down 20% on. General Mills, I used to be down a lot more, but I just kept averaging down. AbbVie, I'm down 5% on. And so, yeah, so these stocks I feel comfortable about investing in no matter the time period, obviously because I'm down on them a significant amount. 3M, I used to be down on a lot. As you can see, 3M took a bit of a hit over the past year or so. So since 2018, it's just been in a steady downtrend. But I just kept on averaging down on 3M. Same thing with Caterpillar. I'm honestly surprised that I'm up on this one. So Caterpillar, I'm up around 3% on, but clearly since the start of 2018, it's been in nothing but a steady downtrend. But I just kept on averaging down. Constellation Brands, once again, is down. However, I'm continuously investing in Constellation Brands, and I'm sure at some point my average cost and my position will be positive. So yeah, I totally feel comfortable about investing in these. A stock like Kraft Heinz and a stock like General Mills is definitely more there for the dividends rather than capital appreciation. But it's fine if some stocks serve one purpose and some stocks serve another purpose. This is something that I feel comfortable in. The one stock that I want to really emphasize here is A.O. Smith. So I've made an in-depth video about A.O. Smith. I will link it in the description below. But A.O. Smith, the reason why I liked it so much is because, well, first of all, no one has ever really heard of A.O. Smith, and it definitely took a tumble. It looks a lot like Constellation Brands or Caterpillar, but I just kept on buying around here around December 24th, and currently I'm up on it around 37%, so that's a pretty massive amount. And it does pay a pretty solid dividend yield of, I think, around 3%, or actually 1.7%, that's right. But it does increase their dividend yield pretty quickly. As you guys can see, this year it's paid 22%, and then last year paid 18 cents, and the year before paid 14 cents. So that's a pretty significant increase for something as massive as A.O. Smith. So once again, I didn't want this video to get too long. I would rather just do a in-depth walkthrough about each portfolio. But that's my L1 Finance portfolio since May 4th, so that's around maybe like 8 months since I've done that. I don't know how much longer I'll have this M1 Finance portfolio. Hopefully I keep it forever, but I wanted to give an update on my life. So I'm actually thinking about getting into real estate, and I'm getting in touch with a really good real estate agent who will be sending me deals my way. And it's possible that if I do want to invest in real estate, the funds that I'll be taking the money from will be the M1 Finance and will be my other one, which is a mutual fund. Probably not my Robinhood if I can help it, but it's possible that this one starts to see some money taken out of it. So I just wanted to make a video about it. It's possible that this is a farewell, but maybe not. It really depends on the deals that I get. If it's worth it to invest in real estate, I'll do it. But you guys know how much I love the stock market, so maybe I don't have to. But yeah, so that's it for this one. Thank you guys for watching, and thank you guys for all the support. Hope you guys have a great night, and good luck trading.